Hello everyone, welcome to the Ichimoku daily analysis for the SP500 for Monday, June 22nd. Well, quite a bearish day today. Very easy to see that the market's bearish. We have a red candle. That means that the market was net bearish and a very, very large body, which shows the extent of that bearishness. Stark contrast to the last 3 days of trading when the market tried to rally, a very, very weak rally previously and a very strong sell-off. Now if we look at each of the legs of these downswings here, look at the character of the candles when the market sold off. Very large bodies compared to the previous when the market was trying to rally here. Red bodies. The market was trying to rally on green bodies with green candles with very small bodies, and then today now the trend changed to the downside on a very large body and red, which means that the market was very bearish. Now we have a new first time frame downtrend. We have a lower high and a lower low, so the trend has changed. Now the market opened at the high and closed near the low, which means that the bulls had absolutely no power throughout the whole day. The bulls lost any commitment that they had to pushing this trend higher, and it's little wonder when we look at all of this strong resistance up through this region here that the market's sold off when it tried to rally up through there. So at the end of the day, the market closed with the bears in control, and the bears very strongly committed to pushing this market lower. Now if you look at the trend in the second time frame, it's a major change that's happened today. We now have a second time frame downtrend. We haven't had a second time frame downtrend for some time, and the last time was earlier this year. So we're now halfway through the year. We've had roughly about 4 or 5 months of a very, very strong rally in the second time frame. We had an uptrend, and now we have a change of trend to the downside. We have a lower peak and a lower trough, and we can see here we have a peak, a trough, a lower peak, and then a lower trough when we took out this trough here. So a major change of character of this market. Now something that may save the market from trending down much further is the fact that we're now trading at the cloud. We're trading at the Kumo. And interestingly, we're going to interact with the flat part of the Kumo here. We know that the flat part of the Kumo here can act as an attractor of price action, and it's little wonder that the market has started to trade down towards there. So what we need to be doing is looking for some sign that the bearishness in the market is evaporating. Now we can't predict that at the moment. We just have to wait and see how the market reacts. Now the thing is though that the cloud may act as support anywhere through this area of the cloud. It may act as support at the top of the cloud, which is most likely at the moment, but the market could still trade down into the cloud and find support in through there. It could even find support down at the bottom of the cloud. Now, the thing is too that if the market trades down through the bottom of the cloud, then the market will basically, in Ichimoku chart terms, be bearish. While we're still trading up above the cloud, the market is overall bullish and has a bullish bias to it, so there is still a bullish bias to the market. But unfortunately, as we said earlier, the trend has changed. Now, if we do trade down into the cloud, which is a very strong possibility, then the most likely area that will hold up within the cloud will be this area of support through here, which was the bottom of the previous descending triangle. So a very strong area of support that was tested on 1, 2, 3 occasions. So that will be a very strong area of potential support for the market. If we do trade down further into the cloud, then there's a couple of areas that we'll look to. A minor area here of support, roughly about 850, and then a stronger support area at roughly 827. So if the market does trade down through this area, though, depending on how bearish the market is, it potentially could trade down all the way down through into here. So we just need to be patient. I doubt that anyone would be looking to go long in a market like this. So even though we do expect the market to find some sort of support through here, we do need to change the the trend in the second time frame from down now to up, and the market will need to do a lot of work to do that. If the market does rally, then this area here is still a very strong area of resistance. So we have a well-defined area of resistance on top, we have a well-defined area of support at the bottom, and that really sounds like the market may be setting up to do nothing. We may see the market trending sideways for a period of time. Very difficult to say whether it will, but just looking at the current candle, very bearish, and we should expect that the market will continue to sell off to a degree.